All right, let's talk about the beating heart of the crypto world, the exchanges. These are the marketplaces, the digital trading floors where all the action happens. If you want to buy, sell, or trade crypto, this is where you go. Just imagine for a second a stock market that runs 24/7, 365 days a year. There's no opening bell, no closing bell. Ever. It's a global, non-stop financial engine, and it's trading a whole universe of new assets. That's the crypto market.
So that sounds pretty cool, right? Unlike Wall Street, pretty much anyone with an internet connection can tap into this market. But, it's not always clear where the front door is. So how do you actually get in on this?
Well, the answer is an exchange. For almost everybody, this is their first stop. You really should think of an exchange as the on-ramp that connects our regular money, dollars, euros, whatever, to the digital world of Bitcoin, Ethereum, and all the rest.
Okay, so once you're on this on-ramp, you'll find there are basically two different paths you can take. Path 1 is the centralized exchange, which we'll call the crypto bank, and path 2 is the decentralized exchange, which is a lot more like a robot market. Let's break down what that actually means.
So let's start with path number 1. This is the one most people take, probably because it feels the most familiar. These are the giants of the industry, and they operate a lot like the banks we already know.
A centralized exchange, or a CX as you'll hear it called, is just a company. The big names like Coinbase or Binance, they act just like a normal bank or a stock brokerage. And the key thing to get here is that they hold your funds for you to make trading super simple and fast.
And yeah, the process is pretty straightforward. You sign up, you verify your identity, you send them some money, and bam, you're trading. But, and this is a huge but, when you trade on a CEX, you are not actually trading on the blockchain. Nope, the exchange is just changing numbers on its own private spreadsheet. It's instant and it's cheap because it's all happening inside their own little world.
And look, there are some really good reasons why people use them, especially if you're just starting out. They're that crucial on-ramp from regular cash. If you lose your password, there's actually a customer support team to help you out. And they have a ton of trading volume, which just means it's really easy to buy and sell quickly.
But, and you knew there was a but coming, there is one single massive trade-off. There's the saying in crypto, it's like a mantra, not your keys, not your coins. All it means is that if you don't control the private keys to your crypto, you don't really own it. And on a CEX, you're trusting them to hold your keys for you. And these risks, they're very real. First, there's custody risk. The exchange could get hacked or go bankrupt, remember FTX, and poof, your funds are gone. They can also just freeze your account if they want to. And, of course, they collect all your personal data for the government. You're basically trading away your control for a little bit of convenience.
Okay, so that was the crypto bank. Now let's jump over to the other path, the wilder, more autonomous alternative, the robot market. We're talking about decentralized exchanges, or DEXs.
So a DEX, like Uniswap, for example, isn't a company at all. Seriously, there's no CEO, no office building, no customer service line. It's just a piece of code, a smart contract that lives on the blockchain. It's not a service you sign up for, it's a tool that anyone can use. And using one is totally different. There's no account, no ID check, nothing like that. You just connect your own crypto wallet, pick the tokens you want to swap, and you approve the trade yourself. The money never leaves your control. It goes from your wallet, through the robot, and right back into your wallet.
So you can probably guess the benefits here, right? DEXs basically solve all the big problems of CXs. You always have custody of your own coins. No one can freeze your funds because there's no one in charge. You get to keep your privacy because there's no ID check. Plus, you often find brand new tokens on DEXs way before they ever hit the big exchanges.
But of course, there are downsides. DEXs are definitely more complicated to use, especially for a beginner, and they're usually just for swapping one crypto for another, so you still have to use a CX to get your cash into crypto in the first place. You also have to pay network fees, gas they call it, on every single trade, and there's always a risk that a hacker could find a bug in the code.
So now that we've got the two main types of exchanges down, how do they actually work under the hood? Let's take a quick peek at how prices get set and, of course, how these platforms make their money. Centralized exchanges use what's called an order book, which is straight out of Wall Street. It's just a big list of everyone who wants to buy and everyone who wants to sell, and the exchange plays matchmaker. Decentralized exchanges use something totally different, called a liquidity pool. Instead of trading with another person, you're swapping tokens with a big pot of crypto locked in the smart contract, and an algorithm sets the price.
And how do they make money? Oh yeah, fees. You've got your trading fees, sometimes a hidden fee called the spread, but the one that really gets people, the one that sneaks up on you, is the withdrawal fee.
$30. Just let that sink in for a second.
And what is that $30? Well, that could easily be the fee an exchange charges you to withdraw just $50 worth of Bitcoin. I mean, these fees can be insane, and they can wipe out a huge chunk of your money if you're not careful. Always, always check the withdrawal fees before you buy anything.
Okay, I know that was a lot of information, so let's boil it all down into a simple, actionable guide. How do you actually navigate this world safely? Here's your traveler's guide.
All right, here's your safety checklist. Number 1, use an authenticator app for your two-factor security, not SMS text messages. It is so much safer. 2, I'm going to say it again. Check the withdrawal fees before you buy. 3, look for exchanges that have a public, audited proof of reserves. That's a report showing they actually have the money they say they do. But honestly, the most important rule is this. Treat an exchange like a public bathroom. Get in, do what you need to do, and get out. Don't leave your crypto sitting there long-term. Move it to a wallet that you and only you control.
And that brings us to the final question. And this isn't just for a fact, it's a real question you should ask yourself right now. Based on everything we just talked about, is your crypto truly safe where it is? Think about it.